Good morning, ladies and gentlemen. Today's session we are going to proceed about intermediate financial accounting, where we are going to look for topic number 3. So in topic number 3, it is accounting for incomplete records. Welcome everybody for Uppertech TV. It is a great pleasure to have you who tune in. So let's proceed about this topic. In our learning outcomes, this topic aims at imparting students with knowledge and skills on how to set up books of accounts for an entity with incomplete records. After successful completion of this topic, you will be able to identify the different reasons why an entity may lack proper records in accounts, and also you will be able to know and use of different techniques to trace missing records and figure. And also after that, we shall look about the prepare the final account. So in summary, we shall look about the different reasons why incomplete records may be happen. So for this, the reason of this, there may be a lack of knowledge of an accountant, and also maybe a large cost of an expert, and also maybe a damage due to like fire can be affected like an entity. So number B, the use of the different techniques. There are many different techniques we can use in order to trust that missing records, such as can use control accounts, and also we can use ratios, and also we can use accounting equation, and also after getting that, we prepare the final account. So let's go for an introduction. Incomplete records are any accounting records which fall short of complete double entry. When it comes for double entry, it is accounting concept where I would say that all records must be recorded twice. Record double entry where every transaction is recorded twice in two different accounts. When accounts are kept whereby double entry is not followed or flowed part, then this is a single entry. There are different degrees of incomplete records, maybe a high degree or low degree. So they are saying that it is a different degree of incomplete records. So there may be no records at all that are kept, and also there may be a part or single entry. There are reasons for incomplete records. The incomplete record may be due to lack of accounting knowledge by the owners of the business, maybe expensive accounting expertise due to the size of the business, or records may have been destroyed in a natural disaster like fire, floods, war, or thieves. This may be a reason of incomplete records. The first one may be a lack of knowledge of the owner expensive accounting expertise. Codes may have been destroyed in a natural disaster like fire, floods, war, or thefts. That is the reason for incomplete records. If no records are kept at all, this may be due to lack of accounting knowledge or loss of records due to the natural disaster. In such circumstance, the accounts will need to be reconstructed from estimates and whatever evidence that can be collected. When it is recorded at the single, this may be due to the lack of accounting knowledge and that expertise being expensive. Here, no records may be kept of the personal accounts, like debtors and creditors, but the nominal accounts will not be kept. In such situation, it will be hard to extract a true balance to enable preparation of final accounts to show the profit or loss for the period of the financial position. My dear friends, let us look how to prepare preparation of the final account. We can use extended accounting equation. This is the first techniques to be used. To know the financial performance and the position, the opening and closing capital information is obtained and compared. Any other information like drawings and additional capital is also obtained. Do you understand? The accounting equation then used to determine the profit or loss for the period. I hope you are understanding this. The accounting equation in extended format is as follows. We take opening capital plus additional capital if is any, plus profit or loss, and also we raise drawings to get the closing capital. This is a formula we use always for using extended accounting equation. Let's go for an example. Example number 1. The following information is provided for Johnson Traders. We have capital for the 1st October 2017 and total asset at 30 September 2018. Have total liability at 30 September 530. We have an inventory taken by Johnson, the proprietor, for his personal use on the 1st April 2018, and also you have cash drawings by Johnson during the year to 30 September, and also we have a legacy received by Johnson on the death of a relative and paid into the business bank account, which is 70 and 300. In our question, they are asking us to calculate profit of Johnson Trade for the year to 30 September. This is a formula that shows how we can calculate profit or loss. That means if you are asking us to calculate profit or loss, we have to take, that means here the profit or loss will be equal to closing capital minus opening capital minus addition capital plus drawings. That's how we are going to calculate the opening. We are going to calculate the profit or loss. In our question, see, they give us the opening capital, which is equal to 230, and also we have drawings for here, and also we have another drawings, cash drawings, and we have to add, and also we look into the weeks, and also we have additional capital here. So that shows us how this may be looking like. Let us collect this question for the first question now. First example, they gives us, this is a given data, they gives us the capital, and it gives total asset, it gives total liability, it gives personal use, drawings which is for personal use, have drawings for weekly, and also you have additional capital. So this is a solution. We are going to collect this. So the first things you have to do is to prepare for the first time, to prepare the balance sheet. It shows where is the closing capital. My dear friend, you have to understand this. This is a balance sheet. We are going to prepare for the first time to look how this look like. In our question, they gives us asset which is equal to 1,010,000, and also they gives us the ability of 530. So we are going to look at the closing. This is the closing capital, means the balancing figure. This is balancing figure. So this is a balancing figure in order to balance total asset and total liability. This is a closing capital in our that is a closing capital we have to look like in order to use it in our formula. We have formula here that is looking like in our formula to get extended equation. They saying that we take opening capital plus additional capital plus profit and loss, and also we rest drawings to get the closing capital. So if we don't have this, we have to use that formula. We have to check for balance sheet before. So our solution will be looking like this, where the Johnson profit and loss account will be looking like. You have closing capital from this is a balancing figure from balance sheet we make before, and also we have to add drawings for weekly. In our question, they give to us per week they drawing 3,500, but it is in a year. The year it have 52 weeks, so that's why I take 3,500 times 52 per weeks to get this. And also you have drawings for personal use. They drawing money for personal use. That means is equal to like this, and also you have to add, and also you have to raise opening capital, which is equal to 1,030, and also we raise additional capital to get profit and loss, which will be equal to, we take this, and also we add this, we add these drawings with less opening capital, with less additional capital to get profit and loss, which is equal to 4,011 and 900. This is our solution for example number 1. My dear friend, please stay in touch, and also you have to stop the video to look how I work this. So better to take a pen and also you write somewhere, because in exam they may be asking you the same question like this that is looking like. So my dear friend, remember to take a pen and make a practice. Let's proceed for example 2. Nsabimana, who runs a small supplies store in Rusizi, had the following assets and liability at the start of the year and end of the year 2018. We have assets for the 1st January and the 1st December. Their asset and liability. That means here for the January it is for opening. My dear friends, here for January it is for opening. I hope you are understanding this. This is for opening asset and liability. For closing it is this for the December 31. During the year, Saimana withdrew 4,500 and introduced 3,000, which was a donation to him by leading a non-government organization in the area. He decided to depreciate furniture 10% of the cost at the end of the year and create an allowance for bad debt of 10% on debts balance at the end of the year. What you require is to determine the profit and loss the year 2018. My dear friend, stay in touch. We are going to collect this. Let's go. Here for that example, as I have taught you, we have to determine the opening and the closing capital balance. It will be necessary to draw the statement of affair as at the 1st January and the 31st December. The first statement we are going to draw here, it is this. I hope you are looking here, my dear friend. So we have to draw this statement of affair for the opening to get the opening capital. That means here we have non-current asset furniture, which is called 3,000, and also we have current assets. Now question, which have stock, have debtors, we have income accrued, and also we have cash, and also you have to get the total, which is equal to like this. That means our furniture equal to 3,000. The total assets will be equal to, we are taking this and also we add this to get the total asset, which is equal to this. So what about the opening capital? That is what we are looking for. Opening capital, as I have told you, it is always balancing figure. You take asset minus total liabilities. That means here we will be equal to this minus this to get balancing figure. This is balancing figure, my dear friend, where will be used. We take this current liability and also and capital to make a total to get the solution about the the solution about the liability. So as we know, we have to get a balance sheet which is equal to this, where we take where it must be equal to total asset, and they will be equal to total liabilities. My dear friend, this is for the first opening capital. Let's go for the second one to calculate the closing capital. As you know, to get the profit and loss, we have to take closing capital minus opening minus additional capital, and also we add drawings. So let's calculate here. You see here our total asset will be equal like this, and also we want to get the total liability which is equal like this. So we have to log the balance figure to get the closing. So balance figure will be equal to this, raise this to get balancing figure. That means our closing will be equal to this. My dear friends, remember this. This is a good topic everyone must know. So as you see here, in our solution, the balance figure, the capital is obtained as a balance figure, that is opening capital, and also here the capital obtained as a balance figure, you see here. So our solution to obtain the profit and loss for the period as statement of profit and loss is drawn as follows by the following in the accounting equation. We have to statements of the profit and loss for the year ended. We have to take the closing capital balance, which is equal like this from the balance sheet, and also we add drawings, which is 4,500, and also we less the additional capital, we less opening capital to get the profit for the year ended. This is an example number 2, which is simple. Everyone can try our best to get the statement of affair, and also you get the profit and loss for this bill later for the year ended. My dear friend, take your pen and also you calculate this. It is simple, and also you will get the answer. The practice make more perfect. Let's go for another techniques to get the necessary documents, and also to get the more knowledge about how to combat the incomplete records when they may be happen. So the total trade account is used to calculate the total credit and cash sales, and the total trade payable is used to calculate the cash purchase and also credit purchase. I hope you're understanding this. As I have explained in the first video where I was telling you about the control account, this is an example. Mr. Antoine had the following figures for the year ended. That means in 2017, as opening trade receivable was this, and closing trade receivable was this. For the year ended 31st December 2018, cash sales was this, cash receipt from debtors was 1060, discount allowed was 45, but date was 56. My dear friend, capture this. To collect this, we have to draw the trade receivable control account. As I have said, in a credit side, we put into the amount the figures that are reducing our stock for trade receivables, and this we will put the amount that is remaining. So our opening was 34,500, so you have to put in the credit side amount that is reducing our balance. We have allowed them 45, that is reducing our balance. We have about data, so we have to remove it because it must be reduce our sales. And also you have cash from the customer. If the customer pay to us, it's reducing the date. So if and also you have cash sales. If we sell something, it's reducing our sales that you have sales on credit. And also here we put into the closing balances. So the balance figures which is here will be sales or maybe cash or credit sales. That is our solution to make complete record. This is an example number 2 to calculate the purchase. To calculate the top purchase. If they are asking you to calculate the total purchase, you have to use payable trade accounts. My dear friend, you have to practice this. It is simple. It is an inverse for trade receivables, so that you have to use payables contra account. For this number 3, it is to use ratios. The first thing is in ratio we have markup. For markup, to calculate the markup, we take a gross profit percent divided by the cost of sales to get the markup. To calculate the margin, you have to take gross profit divided by the sales. There are relationship between these two ratios. If the margin is known, the markup can be found out. You have to take the same numerator of the margin. The denominator is different of denominator and the numerator of the margin. For example, if the margin is 20%, that means it is equal to 1/5. Then the markup will be equal to 1/4. That means our margin, they give to us the margin. If they give to us the margin, the denominator, you have to take the denominator of markup of margin, you raise 1 to get the markup. That means if you have markup, you take a denominator of markup, you add 1 to get the margin. So here we have to take markup 100% and divide by 100 minus markup. I hope you understand this. For if they give you a markup, you have to add that markup. I hope it is clear. This is a question they give to us. The stock on 2018, this opening stock, closing stock, this purchase, this is drawing, this is drawings by cash, this is the gross profit margin. What they are asking us is to calculate the gross profit and sales. Our solution to get the cost of sales, we take opening stock plus purchase minus drawings of goods minus closing stock. In our question we have all this. That's why we have to use this to calculate everything. So the markup will be, if we were getting the cost of sales, that means you are going to use markup. Our markup will equal to profit, gross profit margin, you divide by 1 minus gross profit margin. So in our question they give to us the gross profit margin is equal to 25. So that's why we use this formula to get the sales. The sales of us will be equal to this 1,853,333. This is an example number 2 where everyone can calculate. So it is a simple and also simple techniques you have to read, and also you make a practice, and also you get the solution. This is the workings. So you have to stop this video and look how it may be looking like. So let's go for use of all techniques. When it comes for use of all techniques, the first things you have to start, you have to draw the statement of affair at the commands of the period, at the starting period, my dear friend. The second, you have to prepare the cash and bank account if no existing. And also for third, you have to determine the sales and purchase of the period by using the control account like sales ledger and purchase ledger. And four, you have to determine the expense and income for the period after adjusting the accrual and prepaid. If there are additional information that's saying the accrual and the prepaid was this, you have to adjust it. For number 5, you have to adjusting other current assets like data and the inventory, and also you have to depreciate non-current assets, and also if there's disposal, you have to make it. And also number 6, you have to get other information like drawings of cash, of goods, additional capital, any thieves or other disaster. And also after that, you have to prepare the final account in the light of the information given. There may use of the common ratio to determine the missing figure like sales, purchase, and other balances or loss due to the natural disaster. My dear friend, in the next session we shall come here by collecting this by using the old techniques. Thank you very much. May God bless you for coming here for Upper Tech TV. Remember to subscribe.